But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Hyperinflation today. Let's take a look at it. But before we get going, let's see where metals closed today. We have gold at 1505.50, silver 1782. Gold up 80 cents, silver up under a penny, just about a penny, 1.6 cents. And there's the gold chart earlier today when it was up about 960. And you can see it over the course of the day really rising up above that 1500 mark and closing above it again. I stumbled upon this gold coin out of Germany while looking at some hyperinflation information today. Take a close look at it as we read through this article discussing the imagery and history behind this unique gold piece. This coin is up for auction currently. Hyperinflation was rampant in Germany after World War I, as ever larger denominations of paper money were created to deal with the shrinking value of money. Most of you are familiar with this as we've discussed this period in history quite often here on the channel. Even small purchases required enormous piles of banknotes. The value of some notes was so tiny it was cheaper to use them as wallpaper than as spending money. In the recent changes to the intro of this channel, you can see some images of the German currency back at that time period. Now, bear with me here and stay with me as we go through today's episode, because we are going to talk about very recent and very current information on hyperinflation. So let's just get through this first part and stick around because it's going to be a fun day. The climax of this economic calamity came in 1923 when notes denominated as much as 50 billion marks were issued. The causes of this hyperinflation are clear in hindsight. The Treaty of Versailles after World War I mandated Germany pay reparations in gold or foreign currencies, which had to be bought with an ever-falling German mark. Naturally, the population was squeezed by the new economic reality, and the situation dominated political and daily discussions. An interesting numismatic sidelight to this episode is a satirical gold medal issued in 1923. Example of this medal is available in Fritz Rudolf Kunker's October 10th auction in Osnabrück. The medal depicts the German Michael, a personification of the German nation, who is depicted as eating a gold ducat and excreting paper money as his feces. The medal, inscribed as ducat, is also given a fictitious face value of 10 billion currency units of a currency called, quote, inflation. The reverse inscription translates as, "This is how we live from paper money until the devil catches everything." And the obverse says, quote, "Where has all the good money gone? People, have a good look on what is falling down here," unquote. Sebastian Wieschowski, Coin World Germany correspondent, provided the translation and commented, "The medal is a reference to the post-war situation where Germany was forced into heavy reparations which could not be paid with regular income from industry production. That's why Germany tried to pay off debts by printing more and more paper money and by getting its hands on private possessions of precious goods such as gold." The medal is a perfect accompaniment to notes from the era. The medal is graded extremely fine to uncirculated according to the auction house and has an estimate €3,000 or 3,320 US dollars. And I guess that's what they're guessing it's going to go for. Well, that was then, and this is now. Zimbabwe struggling with hyperinflation again, being called a nightmare. We're also seeing it in Venezuela. Headlines and stories covering this topic are all over the internet these days. Zimbabwe struggles with hyperinflation. It's a nightmare, this headline reads from the Associated Press. Zimbabwe struggling with hyperinflation. In this photo taken Thursday, August 8th, vendors are seen on their mobile phones while selling cash in Harare, Zimbabwe. Hyperinflation is changing prices so quickly in Zimbabwe that the price you see on a store's window might change by the time you try to pay. It is a nightmare, Macheko said. I can't plan. When your entire salary buys 7 kilograms of beef and some peanut butter, how hyperinflation hit Zimbabwe. This article is out from October 19th. Before Robert Mugabe was forced to resign as president in late 2017, Macheko earned about $24 from his wages. He says that was enough money to pay for everything his family needed. Now, the same amount can hardly buy 4 kilograms of meat. Macheko finally decided to buy chicken skin for his family's dinner. It is the closest his family gets to eating meat. They've resorted to eating chicken skin. The International Monetary Fund, the IMF, estimates that Zimbabwe has the second highest inflation in the world, after Venezuela. The Southern African nation had high inflation 10 years ago, but hyperinflation is destructive. Zimbabwe's economy has been shrinking for more than a year. Anyone who thinks a solution is in sight must be very brave, said economist John Robertson. Government officials don't want to admit the real causes and don't want to fix the real problems. Let's read that part again and apply it to our country, or the Eurozone, or the UK. Government officials don't want to admit the real causes and don't want to fix the real problems. He said the real causes include the government spending more money than it has. Please remember that line because we're going to come back to it. Speaking of Venezuela, Venezuela boosts worker pay again amid hyperinflation. Caracas, Venezuela. Venezuela announced a dramatic hike to the minimum wage Monday in a move that critics expect will do little to alleviate widespread suffering in the crisis-torn country. The monthly package of pay and bonuses workers will soon bring home equals roughly $15 monthly, Socialist Party lawmaker Francisco Torrealba said on Twitter, announcing the increase of more than 350%. It is the third pay raise this year in Venezuela. A once wealthy oil-producing nation plunged into an economic crisis with hyperinflation that devours the regular increases. Oh, socialism, how creative you can be. Critics immediately lashed out, saying the bump lacks accompanying measures by President Nicolas Maduro's socialist government to fix the broken economy and end hyperinflation. A whole chicken at a supermarket in September cost 80,000 bolivars, equivalent to roughly $4 US. Venezuelans are buying gas with cigarettes to battle inflation. It just goes to show the old adage about buying guns, ammunition, whiskey, cigarettes, well, it holds true if you're going to stockpile that stuff, because during hyperinflationary events, people still want those goods. They're tradable, they're barterable, and they hold their value. Gold being, of course, the best because, of course, drink or tobacco can go bad, rot, or decompose. However, you can see here that motorists and socialists of Venezuela have long enjoyed the world's cheapest gasoline, with fuel so heavily subsidized that a full tank these days costs a tiny fraction of a U.S. penny. It still only costs a tiny fraction of a U.S. penny, but the economy is in such shambles that drivers are now paying for fill-ups with a little food, a candy bar, or just even a cigarette. I would not want to trade places with the Venezuelans and the economy that they are living under. However, it would be nice to be able to fill up your tank of fuel with just a cigarette. Bartering at the pump has taken off as hyperinflation makes Venezuela's paper currency, the bolivar, hard to find and renders some denominations all but worthless so that nobody will accept them. Without cash in their wallets, drivers often hand gas station attendants a bag of rice, cooking oil, or whatever is within reach. Gas station attendant Leopoldo Sanchez poses with food items he was paid with by motorists: a bottle of cooking oil, a kilogram of rice, and a package of corn flour as he works at the pump in San Antonio de los Altos. This is an AP photograph. The smallest bill in circulation is 50 bolivars. It is worth about a quarter of a U.S. penny. City buses and even banks don't accept it, arguing it would take such a thick wad of bills to pay for even the most modest items that it wouldn't be worth the trouble. The largest bill is 50,000 bolivars, and that equals about $2.50. We talked about the Zimbabwe notes and how I have the old historic one that became famous as having the world record of printed denomination or valuation placed on it, and that's the $100 trillion note. And what's interesting is where these notes come from. What makes them their currency is another issue, but where they come from, the printing presses. Now, the Zimbabwe notes that we've talked about, and I've done videos on this, actually come from the very same presses, the same paper even, the same printing houses that the Euro notes came from. And the only difference is the face of the fiat, who's issuing it. And we all know it's just held up by nothing, empty promises. And the debt of Western nations, what's preventing it? It's such an unbelievable conundrum. It really does fog the mind that Western people, the media, citizens, politicians, and I believe there's an inherent strain of racism in this, because they believe they're immune to these forces. They believe that hyperinflation only affects third world, brown or darker countries. Africa, South America, places like that. They don't think it can happen in the UK or in America or Canada, or Australia, New Zealand, or anywhere in Europe. Well, why not? Why is that? Is it because you believe that because you are run or overseen by white overlords that it's impossible? They're doing the very same things. Remember what we just read from that economist earlier as the causation for these hyperinflation events. Governments spending more money than they have and not wanting to address the real problems. The very same environment, the very same forces at work that are causing these events in these countries are at work and at play right now where you're sitting, if you live in a Western country, especially here in the United States. And what is it? $23 trillion, $2 trillion a year debt. We're now at $23 trillion. It's unbelievable. And then if you look at all the liabilities that the U.S. government owes, it's in the hundreds of trillions. Look at the debt clock. And there's nothing backing the currency whatsoever, other than it is the world reserve note, which we see other nations trying to position away from and out of. And that is why central banks are rushing towards gold. Eventually, this is a giant game of musical chairs. And when the music stops, whoever's got a chair to sit in, well, they're going to last a couple more rounds while the music plays. Whoever doesn't have a chair is out. And in my opinion, that chair is made of solid gold. Whoever has a golden chair will be able to sit down and rest until the music starts up again and we keep playing this game. Whoever's left without a chair is out. Now, that chair is gold. We've seen it happen in Venezuela. It's getting worse there. This is just the tip of the iceberg as far as stories go on how bad it really is in Venezuela. Zimbabwe, really bad. People in Zimbabwe, if you look at the news over the last couple of years, have gone through the ringer. Everything from hunger, starvation, unrest. You've got people panning for gold in the streets, looking for just little bits of gold dust in certain locations, trying to purchase goods and services with that. And now we see in Venezuela bartering take place with commodities like cooking oil, rice, and cigarettes. Now I understand and I apologize. Sometimes you log onto this channel and it's like beating a dead horse. It's like a Groundhog Day. It's the same story, the same idea every day, right? Well, I can't really help that. That's why we're here. That's what this channel covers. Now let's talk about gold really quick. There's an article here that's going to tie into these articles we just read, because we admit and we know gold is that safe haven. It is that protection against these types of events. Gold has provided portfolio protection in the past 11 crises. The chart you see below measures the performance of spot gold versus the S&P index versus during 11 crisis periods since 1985. Gold returned an average of 6.4% compared to negative 21.7% for the S&P 500 for these 11 crisis periods. The biggest crisis period is not even up there yet. Now imagine a crisis period combined with a hyperinflationary event. The S&P is denominated in US dollars, correct? So it doesn't matter at that point what the S&P is valued at. However, it would drop dramatically. Now let's say you cashed out and now you had US dollars. What are you going to do with them? If it takes $100,000 to live for 1 month on goods and services, what you need to survive because of hyperinflation, how far would your S&P investment, if you pulled out, let's say $200,000 or $300,000, how far is that going to get you in a hyperinflationary scenario? And the point of that is it's not. You have to get out of US dollars. They are toxic. They're rotting. And again, it's just a matter of time before these types of scenarios come due here domestically and affect the currencies that we are used to exchanging with every day. The only thing keeping it propped up right now is the blind faith of the populace. Let's take a look at some highlights from this article, What is Money? By Michael Leibowitz, 10/21 of 19. Recent article. Different roads but the same path. Government. Bernie Sanders, Alexandria Ocasio-Cortez, Elizabeth Warren, and a host of others from the left wing of the Democratic Party are pushing for more social spending. To support their platform, they promote an economic policy called Modern Monetary Theory, MMT, and you can read about it. In general, MMT would authorize the Fed to print money to support government spending with the intention of boosting economic activity. The idealized outcome of this scheme is greater prosperity for all U.S. citizens. Little do they know, Venezuela pretty much tried the same thing. The critical part of MMT is that it would enable the government to spend well beyond the tax revenue it collects, yet not owe a dime. Okay, so where is that economic force, that energy going to come from? Well, by destroying currency. Now, all of you have seen this chart here on the channel many times before. If the value of a currency rests on its limited supply, are we now entering a phase where the value of the dollar will begin to get questioned? We don't have a definitive answer, but we know with 100% certainty that the damage is already done, and the damage proposed by both political parties increases the odds that the almighty dollar will lose value, and with that, trust will erode. Recall the graph of the dollar's decline purchasing power that we showed in part 1. And this is the graph we're talking about, purchasing power of a 1913 $1 bill. It has fallen over 96%, and it will precipitously decline during a hyperinflationary event, and especially if either party gets their way. I mean, I don't like to see the Republican-Democrat game being played out. It's just like worldwide or world wrestling. It's they're both on the same team. It's all pretend. It's smoke and mirrors. It's theater. And if voting changed anything, it would be illegal. Ultimately, whether it's the military-industrial complex, the welfare-warfare state, all the social programs, the military spending, the debt, the ongoing problems that we see and discuss routinely, all of it points to destruction of the U.S. dollar and further erosion of its purchasing power, as you see here. It is not going to improve. There's nothing that can be done. It is mathematically at this point impossible. So with those facts being known, what is one to do? Well, purchase precious metals, silver and gold, agricultural land, commodities. Position yourself, strategize, and defend yourself to preserve your wealth and protect those around you. If the value of the dollar and other fiat currencies are under liberal monetary and fiscal policy assault and at risk of losing the valued trust on which they are 100% dependent, we must consider protective measures for our hard-earned wealth. With an underlying appreciation of the trust supporting our dollars, the definition of terms becomes critically important. What precisely is the difference between currency and money? Gold is defined as natural element number 79 on the periodic table. But what interests us is not its definition, but its use. Although gold is and has been used for many things, its chief purpose throughout the 5,000-year history of civilization has been as money. And we saw an article recently, we talked about it. I would argue 7,000. About 7,000 years humans have been using it as a monetary unit of exchange, which equals 70 centuries, ladies and gentlemen. Think of that for a moment, 70 centuries. The average lifespan of a fiat paper currency is like 30 years or less, and there's thousands of extinct ones littering the history books. Literally litter. That's what they become. Blowing down the street just like trash or the wrapper off of a used or old discarded candy bar. In testimony to Congress on December 18, 1912, J.P. Morgan stated, quote, "Money is gold and nothing else," unquote. Notably, what he intentionally did not say was money is the dollar or the pound sterling. What his statement reveals, which has long since been forgotten, is that people are paid for their labor through a process that is the backbone of our capitalist society. Money, properly defined, is a store of labor, and only gold is money. Only gold has true value. And that's a point that was the inception of this channel from the earliest video. Your labor, your work, the way you can lock it up and store it to unleash it and release it in the future to benefit you is to lock it away in gold. It'll hold it in the long term for, as we've seen, 7,000 years, a lot longer than you're going to be around. And it will outlast any fiat. And it is out of reach of the inflationary acts of tyrannical and despotic statists who seek to thieve and steal and rob you of your wealth because they do not care about you. They do not. All they want is your labor, and they want to steal it. And the only way they can do that is by destroying the currency you hold in your pocket, in your wallet, or in your bank account. But if you want to hide it, and you want to lock that wealth up, well, you know where to put it. Merchants and workers are willing to accept paper currency in exchange for their goods and services, in part because they are required by law to do so. The Legal Tender Act. Remember, Hepburn versus Griswold. We've discussed that at length. We must trust that we are being compensated in a paper currency that will be equally trusted by others, domestically and internationally. But unlike money, credit includes the uncertainty of value and repayment. Currency is a bank liability, which explains why failing banks with large loan losses are not able to fully redeem the savings of those who have their currency deposited there. Gold does not have that risk, as there is no intermediary between it and value, i.e. the U.S. or Japanese government. Gold is money and harbors none of these risks, while currency is credit. Said again for emphasis, only gold is money. Currency is credit. There is a reason gold has been the money of choice for the entirety of civilization. The last 90 years is the exception and not the rule. Despite their actions and words, the value of gold and distrust of the dollar is not lost on central bankers. Since 2013, global central banks have bought $140 billion of gold and sold $130 billion of U.S. Treasury bonds. Might we say they are trading trust for surety? In summary, currency, whether dollars, pounds, or wampum, are based on nothing more than trust. Gold, with its 5,000-year history as money, represents a dependable store of labor and real value. Trust is not required to hold gold. No currency in the history of humankind, the almighty U.S. dollar included, can boast of the same track record. So there you have it, ladies and gentlemen. Recent news, recent examples of hyperinflation, what causes it, the suffering that people go through to endure it, and the solution, the answer, the safety net, being gold. Thanks for tuning in and being part of the Junius Maltby channel. If you liked this video, go ahead and give it a thumbs up. If you're not subscribed, go ahead and do so. It always helps to share it, so feel free to share it. Spread the news, spread the message. Send it to that family member that you argue with at dinner on occasion, or family get-togethers, that has a blind and unyielding faith in our overlords. So send him the video, see what he thinks of it. But thanks for tuning in. If you would like to get some Junius Maltby attire, or even a nice mug to pour your coffee or your tea in while sitting back listening to the most boring channel on YouTube, the links for that are down below also. All right, have a good night, a good evening, and keep stacking.